It's 10 a.m. right here in Lagos, Nigeria. That means it's time for Business Morning on Channels Television. Good morning and get set for a business-packed 55 minutes. I'm Ini John Mekwa. Let's start with what's going on in the commodities market. First, we see Argentina's corn planting area for the upcoming 2022-2023 harvest is expected to shrink by 2.6% from the previous cycle, and that's because of falling profitability of the crop and low soil moisture. Some 7.5 million hectares of the country are now expected to be planted with the world's most produced grain, and that's according to the pre-season report from the Buenos Aires Grains Exchange. Argentina is the second largest corn exporter, and its farmers are currently finishing harvesting the last fields planted during the 2021-2022 cycle, which is expected to produce around 49 million tons of the crop. The exchange reported that the decrease in area is because of low moisture levels at the beginning of the early sowing window for grains and an unfavorable input-output ratio in relation to past seasons. From there, we move to oil space, where prices were a little changed today as investors grapple with the falling stockpiles in the United States, rising output from Russia, and worries about a potential global recession. Brent crude futures fell by 33 cents to $93.32 a barrel. U.S. crude futures fell by 40 cents to $87.71 a barrel. Prices rose more than $1% during the previous session, although Brent touched its lowest level since February. Well, Russia's earnings from energy export are expected to rise by 38%, and that's in spite of the sanctions, and that's higher oil export volumes, according to a document, in a sign that supply from the country has not been affected as much as markets originally had expected with all of the sanctions on the country. And back here in Nigeria, the Central Bank of Nigeria has ended the interest rate reduction ratio on all intervention facilities. The CBN had cut interest rates from 9% to 5% as part of measures to mitigate the negative impact of COVID-19 on the economy. According to a circular signed by the Director of Financial Policy and Regulation Department, Mr. Chibuzo Efobi, all intervention facilities granted effective July the 20th shall be at 9% per annum. Also, all existing intervention facilities granted prior to the 20th of July shall be at 9% effective the 1st of September. Well, we do have more activities from the Central Bank of Nigeria. Yesterday seems to be a very busy one for them, so we'll discuss that. But that'll be after the short break. This is Business Morning on Channels. You're welcome back. Of course, you're still watching Business Morning here on Channels Television. Well, also yesterday, the Central Bank of Nigeria, no, that was before yesterday, raised interest rates on Naira savings deposits to 30% of MPR. In September 2020, the Central Bank, as part of efforts to mitigate the impact of COVID-19 pandemic, had slashed the minimum interest rate payable on Naira savings deposits from 30% of MPR to 10% of MPR. Well, the bank had explained that the move was aimed at stimulating growth in the larger economy following the economic slowdown caused by the pandemic, and now it's back to 30% of the MPR. But what does it really mean? What does it mean to your savings? What does it mean to liquidity in the country? We have Ayodiji Ibo, Managing Director of Optimus by Afrinvest, joining us for that conversation. Good morning, Mr. Ibo. Good to have you on the show. Been a while.
Good morning, and thanks for having me. Good to be here.
Yeah. Okay, so before we go to this, the one on the savings, let's talk about well, I won't say hike, I would just say reverting to the former interest rate on intervention facilities. So because of the pandemic, according to the CBN, they wanted to make it easier for people to access and also pay back. Now it's back to 9%. What does it mean really for businesses? I think they said from the 1st of September, the new ones will start paying. From the 1st of September, we'll start paying 9% per annum. But what's the implication of all of this? And can we say that we felt the impacts, you know, of the slash in the interest rate in the period that it was slashed?
Okay, thanks. And it's what the CBN did. I think it's is in line with what we are also having in the global space. So during the COVID-19 pandemic, the impact to reduce that impact on businesses, reduce the interest rate on the intervention funds from 9% to 5% for a year, and it was now extended this year. It was supposed to lapse in, I think, in March, and was extended again for about 6 months. So what the implication is that the cost of funds, that's the interest expense, or I would say finance cost for the companies would go up. So a lot of these companies that have benefited would have been positive for them, because when you look at the spread, that's about 4% savings that they would have paid, and that's very significant. I know some sectors, some companies within the agri space that quoted and assessed it. That was also positive for them, because it was one of the cheapest form of funding that I think is available in Nigeria. So it's positive, but in terms of looking at the holistic impact, there's really no data to show that impact assessment, which would also be very good if the CBN can also carry out this, that we're able to see that impact. But looking at the total intervention fund as the proportion of GDP is still very low. CBN is playing its role, but there's a limit to what the CBN also can do, or the impact they can make. Their main focus is monetary, and coming to also play a bit of the fiscal side, it's also commendable.
So, I mean, I guess it's important to also know that this is for the intervention facilities that the CBN makes available, you know, to different categories of people. But at a time when inflation is actually really high up there, we have the impact of the Ukraine war also affecting the economy. Some people are asking, is this really a good time to go back to the 9%?
Okay, thanks. I would say, yes, the CBN has tried for close to 2 years. And when you look at the other options in terms of financing in Nigeria, you would see that the 9% at the single digits rate is still very positive compared to other options of financing. Currently now, for corporates to even issue commercial paper, you would have to, for the CP or for the offer to be successful, it would, even for a 270-day instrument, you may have to raise it up to like 16-17%, depending on the rating of the issuer. So I think that it's positive, and it's a form of, I would say it's also a form of subsidy. So it's also always good not to overdo it. For those that have enjoyed it, and the benefit, I think, it would have accrued to them. And in terms of economy, are rebounded, and that should not be a problem to companies that have assessed it.
Yeah, but companies are paying very high for energy now, among other things. So, I mean, if you say the economy has rebounded, some people will say, I mean, we're having crisis also.
Yes, but I think that what we should look at is beyond trying to rely just on the CBN, there's a major role that the fiscal authority needs to play in this. The private sector, the corporates, should be able to raise capital within the economy. If the environment is conducive enough, if cost of doing business is reasonable enough, then it will be easier for a lot of these corporates to be able to access capital within the economy and not just rely on the CBN. There's a limit to what the CBN can do. When you look at the total amount of intervention funds relative to GDP, I think it's still about 5 to 6%. So it's still very, very low, and there's a limit to what they can do. You're also aware of the ways and means, the support that they are also giving, about 17 trillion based on current amounts to the government. So there's a lot that the CBN is doing regarding intervention and support for the economy.
Yeah, I know that Ways and Means has been a major conversation, that it's getting really high. But let's also look at the other circular that the CBN said that interest rate on savings is now 30% of MPR from 10%. First of all, help us with the calculation. This is 30% of MPR. Formerly it was 10%. So what does it amount to? What's the percent?
Okay, thanks. I'm putting it in basic terms. Currently, MPR is 14%, and it has been moved from 10% or 14%, which would have been 1.4%, now to 4.2%. So it means that, and that's just the minimum, but some banks pay above that minimum. So on the amount, any amount in your savings account, there are a bit of rules for some of the banks that maybe if you withdraw from that account more than 4 times in a month or more than 2 times in a month, you may forfeit the interest. But for those that have that funds there and you have not touched it within that month, it means that the interest you'll be getting annualized is 4.2%, which means that you'll be getting higher return on that's more than 100% increase when you look at it in absolute terms that you'll be getting on your funds. And to also look at why would the CBN be doing this at this time, you would recall that also as a form of palliative or support for the economy and to also increase spending. So what typically happens is that when interest rates are very low, it's a disincentive for people to save. People spend more. So as a result of trying to spur demand in the economy, the CBN brought down the interest rate. But now you can see that the inflation is high. CBN is trying to see how it can curtail spending in the economy, though I don't expect this to have much impact on inflation due to other factors that is currently impacting inflation, in addition to also the increase in money supply to the economy. But by and large, when you look at it from the investor's perspective, it's more money for you, more than 100% of what you got last month. I think the effective date, I think, is from next month. So you'll be having more than double of the return that you are getting on your investment.
Do you see this doing anything to inflation?
No, I don't see it having much impact on inflation because when you look at other factors that are really impacting inflation, we talk about it's more of cost push and not a demand pull. So cost push, meaning that when you look at the cost of doing business is high, there's the impact, the imported inflation, impact of FX on the production is also impacting on prices. Insecurity, agri sector plays a major role, and farmers are unable to farm, and when the amount of production is also reducing. So when you also look at energy prices have also gone up. So these are things that it's not just a reduction in demand would solve. So it's more from a lot of structural issues that needs to be focused on. But it's why I would say looking at it from the investor's perspective, inflation rates currently at 19.68%, that's as at July, and with 1.4%, you will see that the negative real return is very significant. So now increasing it to 4.2% minimum, it would have impact on all other rates, and investors will be able to enjoy better return and be able to bridge that inflation gap. And once investors are able to get better return, it's also likely that we would also see that reduction in speculation on the exchange rate, because most times it's also a game of trying to reduce the negative impact of increase in prices on their savings and investment.
But you know, at a time when liquidity is really squeezed, I'm asking myself, do we really have people who would want to cash in on this? Because dealing with the basic needs is like taking all of the liquidity that is available. So do you have people who want to look at savings because they know they can get 4.2%?
Okay, thanks. Yes, there will be people that will look at that. You know, most times, once interest rate is almost at the zero level, there's no incentive. Why do you want to keep the money in the bank? Why do you want to save? most people would prefer to spend even with high inflation, because by the time you continue to keep it, the cost of the prices of those goods will continue to go up. So what this basically that we would see, yes, the liquidity level is tight, which is the reason for that. We all know about the discretionary cash reserve ratio, the discretionary debits that also goes on within the financial system. That is impacting system liquidity. So it's a different problem entirely, which needs to be looked into. But looking at it from the investor's perspective, I can't be keeping money at 1.4% per annum when inflation rate is at 19.6%. You look at the Nigeria Treasury bills rate, the last one closed at 7.4, 364-day instrument closed at 7.45%. So what we would see is that with the base of inflation rate, all other investment rates will also increase. Deposit rate, that's placement rate, will also have to go up. For the portfolio managers, investors will be demanding for more rates. So if your mutual fund is returning about just 6%, is returning about just 5%, investors will prefer to just put it in savings, keep it with the bank. So what you would typically see is that even portfolio managers will need to look for products that will give them higher return, so that there's that compensation for investing in mutual fund relative to keeping your money without doing anything in the bank. So it will cut across. We'll see that impact even on fixed on bonds rates, because it's like a base that will be set. And lastly, the lending rate. We would see that lending rate, which would be negative for businesses, will also increase, because when you look at the way lending rates are set by the bank, there's always a minimum spread that they need to also have. So with that minimum spread, I'm collecting money from someone at 4%. You also recall that there's that CRR element, about 25% that goes to the CBN, that I won't be able to make money on top. So when I look at that, I look at other fees, the NDIC fee that will pay, the AMPON levy that will pay. All those things would be factored into building and having a rate. So we would also expect that both the maximum lending rate, which is for those that are unsecured or have low credit rating, and the prime lending rate for the blue chip companies would also move up, which will be negative for the businesses. For the banks, cost of doing business, cost of funds would increase, but it will be compensated for based on the loans, and also increase in investment securities that we expect.
Yeah, okay, Mr. Ibo, just before we let you go, FX has been a major issue, for manufacturing, for businesses generally, for the aviation sector. Does this help in any way?
No, this really doesn't have to do with the help with the FX challenges. Yes, what we typically, like I mentioned earlier, is that there may be a reduction in the demand, but because the supply of FX is it's like a drop in the ocean, so you will continue to see that spread. And there's now an incentive for people to run trip. You have the official rate at 430 naira to $1. And you have the parallel market rate at almost 700 naira to $1. So that's an incentive for people to run trade, for people to speculate on the naira, for people to even divert rather than collect the dollars and do business at the 200 naira spread or almost 300 naira spread. People would prefer. The return is significantly higher than even doing the normal business. So these are some of those things that also need to be looked at, so that there's a bit of stability, because there's that impact of imported inflation that we always see on inflation rate on prices of goods, and which will impact on standard of living.
All right, Mr. Adejebo, MD at Optimum by Afrinvest. Thank you so much for sharing your thoughts with us this morning.
Always my pleasure. Yeah. Thanks for having me.
Yeah, well, obviously, when it has to do with FX, we just have to deal with the issue of supply. It doesn't look like we can run away from that. Well, that was the CBN conversation. We have another conversation coming up, and of course, that will be from the commodities space. That's after the break. This is Business Morning on Channels Television. back. Still watching Business Morning on Channels Television. Well, in spite of all the sanctions, we see that earnings for energy export for Russia is expected to go up by 38%. And so we're wondering, is the sanctions really working? Because at the end of the day, this affects the price of oil. As we see, the prices have been dropping, you know, on Russia because of these expectations and an increase in their output. Well, we have joining us now for the second time this week, Adesola Sumoni from Reading in the United Kingdom. He's an analyst with financial derivatives. Hi, Adesola. Good to see you second time this week.
Hi, Ine. Good morning, and it's good to see you too.
Yeah. So the last time we spoke, I don't think we had those UK inflation figures yet.
No.
You are in the UK. How hard is that biting at 10.1%?
Oh, thank you for that question, Ine. First, let me say that this is a record high. The last time we had something like this was 1982, and is the highest in the EU region. The closest, I think, is Germany, 8.5, and we have the US also at 8.5. But it is quite significant. Food prices, in particular, have increased by around 12–13% year on year. So you see it in the price of groceries, right? So we have a monthly budget, right, for groceries, and we know, okay, it buys X gallons of milk, eggs, bread, etc. Now we are having to expand our budget to be able to, you know, to maintain our level of consumption. I mean, it's having a big impact. Let's just put it there.
Adesola, I would have told you to come back home, but here we're dealing with over 19%, you know, so it's biting even harder here. Well, I think we're more resilient. We have ways, because you guys have the energy prices issue really going up, and the weather there, you really need a lot of warmth.
I think for us in the UK, it's quite significant, actually, because, like you said, the cost of food is up 12–13%. The cost of fuel also for people who have cars is also up around 14%. The cost of rail transportation is also up. In fact, as of today, Transport of London workers, rail workers, are on strike protesting the hike in rail costs. In addition to all of those, we are also seeing for October, we're expecting huge increases in the cost of electricity. My electricity bill has, in fact, over the past 6 months, it has gone up more than 50%, and is expected to go up even more in the next couple of months. So it's quite a squeeze for income earners, right? Because of now the money is buying less. You have less bang for your buck. You have less bread for your $1 or for your £1 or things like that. But what is happening actually? What is the good part of it is the social protection, right? Social safety net. The other day I received a letter in the mail from my council that I'll be giving some rebate or something like that. I'm like, okay. Even another one for the energy bills, around £400 for the next 6 months, just to subsidize the rise in energy costs. So those are the ways that, you know, the UK government is trying to cope with it. And I think it's going to be huge for the next Prime Minister. They have to really think about creative ways to tackle this inflation and cost of living challenge.
Yeah, and I think you will have another one with the windfall tax, supposed to start in a couple of months.
Oh yes, the windfall tax, you said. I'll say that at this moment, I do not have very limited knowledge on that subject, so I would rather not comment.
All right, Adesola, but how connected is this to Russia's invasion of Ukraine?
Obviously, everything is connected. Everything is connected. It's exactly why. So, in terms of, let me bring it down to oil and gas, for example. Or let's start with gas, right? So, Russia is like the second largest producer of gas globally, and for the EU, they account for around a third of natural gas production in natural gas supply in the EU. So with the invasion, a lot of the EU essentially imposed sanctions on Russia, and also Russia, I think, in a form of retaliation, is also reducing exports to the EU, and this is simply just pushing prices upwards. Many EU countries are trying to win themselves off Russian gas. They are looking for other exporters, other suppliers of gas. For example, natural gas exports from the US, which is an alternative supplier, has increased sharply, but the US is currently producing at capacity. But in spite of that, it is still not enough to meet the demand from the EU, and that is part of why natural gas prices are high globally, particularly in Europe. Now, Russia has come to warn the EU that if we don't reach an agreement really soon, winter is going to be bloody, because already there's huge demand for winter because of the need for heating. And if Russia is not able to, if the sanction persists, which I think they're going to persist, I think it's going to be quite significant, particularly for Europe, because natural gas is not particularly for Europe, because many European countries are still struggling to find new suppliers for natural gas, and also Russia is still struggling to find buyers for its own natural gas.
Yeah, but I mean, we see that Russia is expecting that its earnings from energy exports should go up by 38%. We're wondering, are the sanctions not biting? Is it biting other countries more than Russia that is aimed at?
That's a very good question, Ine. What actually is happening, particularly for oil, is that there's the kind of reallocation from the buyers of Russian oil, right? So we know that the EU, we know the UK, the US, Canada, Korea and Japan impose sanctions on Russian oil, right? But countries like China, countries like India, countries like Turkey are significantly increasing their demand for Russian oil, and Russia is selling to them at a discount. So I think there's a $10 per barrel discount on Russian oil to all of these countries. So what's happening is this: Russian oil production overall has only declined by less than 3%. But what we are seeing is a reallocation from the traditional buyers to these other new buyers. For example, China and India has increased their demand by. So China and India's demand has increased by more than 1 million barrels per day since compared to pre-war levels. Similarly, Turkey has doubled their demand for oil, their imports of Russian oil, and Bulgaria or Belarus. Bulgaria also have doubled their demand. So that is why Russia's revenue is increasing, because of essentially reallocation from traditional buyers of Russian oil.
Yeah, so we hear of all of that, but we hear that they have to sell at discounted rates. So we're hoping that at least will show. That's on the one hand. And then I read in some places that possibly some buyers of this Russian oil buy it from India and China, like as if it was not Russian oil, from the unfriendly countries. I don't know if you've heard anything about things like that.
No, I haven't actually, but I think what is happening is, first of all, Russia's oil production has only reduced by little, less than 3%, right? And globally, oil prices are at record levels. And if, let's say, average oil price is around $100 per barrel, and Russia sells at $90 per barrel. So if you look at the discount together with the higher oil prices, you can easily see why their revenues are increasing. I think I read somewhere that it's around $30 million per month, and it's about $30 million per month higher compared to what it was before the war.
So imagine what Nigeria would have been getting at this time, if not for oil thefts and vandalism. I'm a Nigerian, sorry, let's look inwards and look home. Imagine what Nigeria would have been happening to our foreign reserve if Russia, in spite of the sanctions, is still making this much money for its reserve and all of that. Then imagine what would have happened to Nigeria without sanctions.
Indeed, Nigeria could have also made a killing from the higher oil prices. But I mean, the situation for Nigeria is a little bit different. We export crude oil, but also import refined petroleum products, right? And so that, I think, takes away some of the gains, because we now have to pay huge amounts of money for subsidy. But apart from that, we are not even exporting as much as we could. One, capacity constraints. Two is because of pipeline vandalism and theft, and all of those factors are kind of significantly reducing how much Nigeria is able to make from the higher oil price environment. And it's a shame, really, because Nigeria really needs FX at this point in time. There's huge pressure on the external results at this point in time.
And then we continue to see that pressure push the naira down. The naira continues to depreciate.
Exactly. So what is happening essentially is more people. There's bigger demand for. So it's a demand and supply issue, right? The demand for naira is very, very little compared to the supply. Compared to Mohammed, demand is bigger than the supply. Essentially, that's what is happening. On the demand side for the US dollars, for foreign currency in Nigeria, we have manufacturers. Because Nigeria is still heavily dependent on imports, we have manufacturers who have huge FX demand. And also because of, they cannot easily get their FX requirements from the central bank or from official means, they have to go through the parallel market or the black market. So that is one way. Two is school fees, which is quite huge actually, because now, permit me to use the word japa, right? A lot of Nigerians are actively looking to migrate out of the country, and that is increasing demand for FX to pay for their school fees. And that is a conversation, an important conversation I think we need to have some other time. But also, many of these foreign companies in Nigeria are not able to repatriate the profits they've made in the country back to their home country. So those are some of the demand factors that are hitting Nigeria's FX results. On the supply side, we mentioned that we have higher oil prices, but things like theft, vandalization of oil infrastructure, and paying so much for subsidy is reducing the supply. Also, agricultural exports, even though the prices of agricultural commodities are huge, less bang for your buck. You have less bread for your $1 or for your £1 or things like that. But what is happening actually, what is the good part of it is the social protection, right? Social safety net. The other day I received a letter in the mail from my council that I'll be giving some rebate or something like that. I'm like, okay. Even another one for the energy bills, around £400 for the next 6 months, just to subsidize the rise in energy costs. So those are the ways that the UK government is trying to cope with it, and I think it's going to be huge for the next Prime Minister. They have to really think about creative ways to tackle this inflation and cost of living challenge.
Yeah, and I think you will have another one with the windfall tax that will start in a couple of months.
Oh yes, the windfall tax. You said. I'll say that at this moment, I do not. I have very limited knowledge on that subject, so I would rather not comment.
All right, Adesola, but how connected is this to Russia's invasion of Ukraine?
Obviously, everything is connected. Everything is connected. It's exactly why. So, in terms of let me bring it down to oil and gas, for example. Or let's start with gas, right? So, Russia is like the second largest producer of gas globally, and for the EU, they account for around a third of natural gas production in natural gas supply in the EU. So with the invasion, a lot of the EU essentially imposed sanctions on Russia, and also Russia, I think in a form of retaliation, is also reducing exports to the EU, and this is simply just pushing prices upwards. Many EU countries are trying to win themselves off Russian gas. They are looking for other exporters, other suppliers of gas. For example, natural gas exports from the US, which is an alternative supplier, has increased sharply, but the US is currently producing at capacity. But in spite of that, it is still not enough to meet the demand from the EU, and that is part of why natural gas prices are high globally, particularly in Europe. Now, Russia has come to warn the EU that if we don't reach an agreement really soon, winter is going to be bloody, because already there's huge demand for winter because of the need for heating. And if Russia is not able to, if the sanction persists, which I think they're going to persist, I think it's going to be quite significant, particularly for Europe, because natural gas is not particularly for Europe, because many European countries are still struggling to find new suppliers for natural gas, and also Russia is still struggling to find buyers for its own natural gas.
Yeah, but I mean, we see that Russia is expecting that its earnings from energy exports should go up by 38%. We're wondering, are the sanctions not biting? Is it biting other countries more than Russia that is aimed at?
That's a very good question, Ine. What actually is happening, particularly for oil, is that there's the kind of reallocation from the buyers of Russian oil, right? So we know that the EU, we know the UK, the US, Canada, Korea, and Japan impose sanctions on Russian oil, right? But countries like China, countries like India, countries like Turkey are significantly increasing their demand for Russian oil, and Russia is selling to them at a discount. So I think there's a $10 per barrel discount on Russian oil to all of these countries. So what's happening is this: Russian oil production overall has only declined by less than 3%. But what we are seeing is a reallocation from the traditional buyers to these other new buyers. For example, China and India has increased their demand by. So China and India's demand has increased by more than 1 million barrels per day since compared to pre-war levels. Similarly, Turkey has doubled their demand for oil, their imports of Russian oil, and as in Bulgaria or Belarus, Bulgaria also have doubled their demand. So that is why Russia's revenue is increasing, because of essentially reallocation from traditional buyers of Russian oil.
Yeah, so we hear of all of that, but we hear that they have to sell at discounted rates. So we're hoping that at least will show. That's on the one hand. And then I read in some places that possibly some buyers of this Russian oil buy it from India and China, like as if it was not Russian oil, from the unfriendly countries. I don't know if you've heard anything about things like that.
No, I haven't actually, but I think what is happening is, first of all, Russia's oil production has only reduced by little, less than 3%, right? And globally, oil prices are at record levels. And if, let's say, average oil price is around $100 per barrel, and Russia sells at $90 per barrel. So if you look at the discount together with the higher oil prices, you can easily see why their revenues are increasing. I think I read somewhere that it's around $30 million per month, and it's about $30 million per month higher compared to what it was before the war.
So imagine what Nigeria would have been getting at this time if not for oil thefts and vandalism. I'm a Nigerian, sorry, let's look inwards and look home. Imagine what Nigeria would have been happening to our foreign reserve if Russia, in spite of the sanctions, is still making this much money for its reserve and all of that. Then imagine what would have happened to Nigeria without sanctions.
Indeed, Nigeria could have also made a killing from the higher oil prices. But I mean, the situation for Nigeria is a little bit different. We export crude oil, but also import refined petroleum products, right? And so that, I think, takes away some of the gains, because we now have to pay huge amounts of money for subsidy. But apart from that, we are not even exporting as much as we could. One, capacity constraints. Two is because of pipeline vandalism and theft, and all of those factors are kind of significantly reducing how much Nigeria is able to make from the higher oil price environment. And it's a shame, really, because Nigeria really needs FX at this point in time. There's huge pressure on the external reserves at this point in time. And
then we continue to see that pressure push the naira down. The naira continues to depreciate.
Exactly. So what is happening essentially is more people. There's bigger demand for. So it's a demand and supply issue, right? The demand for naira is very little compared to the supply. Compared to Mohammed, demand is bigger than the supply. Essentially, that's what is happening. On the demand side for the US dollars, for foreign currency in Nigeria, we have manufacturers. Because Nigeria is still heavily dependent on imports, we have manufacturers who have huge FX demand. And also because of, they cannot easily get their FX requirements from the central bank or from official means, they have to go through the parallel market or the black market. So that is one way. Two is school fees, which is quite huge actually, because now, permit me to use the word japa, right? A lot of Nigerians are actively looking to migrate out of the country, and that is increasing demand for FX to pay for their school fees. And that is a conversation, an important conversation I think we need to have some other time. But also, many of these foreign companies in Nigeria are not able to repatriate the profits they've made in the country back to their home country. So those are some of the demand factors that are hitting Nigeria's FX results. On the supply side, we mentioned that we have higher oil prices, but things like theft, vandalization of oil infrastructure, and paying so much for subsidy is reducing the supply. Also, agricultural exports, even though the prices of agricultural commodities are huge, agricultural exports as a share of Nigeria's total exports is quite little. And if you look at also foreign portfolio investment, foreign portfolio inflows, capital inflows in Nigeria is quite small now because of the tightening in global financial conditions. We are seeing many advanced countries increase their interest rates, which is leading to capital flight. Already we talked about UK's inflation reaching 10%, which is highest we've seen in 40 years. And there are also talks that the UK Bank of England is going to increase their interest rates at a much faster pace. Currently, interest rates are around 1.7%. Some analysts expect it to reach around 4%. Also, because the Office of National Statistics in the UK forecast that inflation is even going to go higher. It's going to peak at 13%. So we still have a long way to go.
Yeah, and I can't imagine what that would do to you, Desola, but you can always come back home. We're always waiting for you back home. But I mean, at the end of the day, what this means is Nigeria really needs to look inwards. You talked about the education. You talked about, the issue of export. If we had more things to export, if we had the education system that would win the confidence of a lot of Nigerians, then they wouldn't need to go out. People like you would have been at home now, and then you'll be paying that tuition fee. So I guess it's a lot of responsibility, but not just for the government, especially at this political period, because Nigerians would have to go out there to vote. So they need to look out for someone who can fix these issues. Exactly.
This is also, like you mentioned, it's a very sensitive period. Nigerians are trying to elect the next president to move things forward. So hopefully, given the hardship, for lack of a better word, in the country, Nigerians will be incentivized to vote a leader that would move things forward rather than voting on stomach infrastructure.
Yeah, because even when you mentioned the high electricity bill and all of that, you still mentioned some of the buffers, the grants, the energy grants that is given to everyone who is in the UK. So if we have things like that, it would really be nice. But let's look at the commodity space now. How is that space? How are prices in the commodity space? I know when we spoke on Tuesday, the price of cocoa was going up. I don't know if it's still going up, and what else is happening in that space?
Thank you again, Ines. So for the global commodities market, like you mentioned, the price of cocoa is still trending upwards. And mainly, like I mentioned on Tuesday, is because of issues around availability of fertilizers for cocoa producers in Ghana and Ivory Coast, which are the largest cocoa producers globally. I think so. That's what is driving the price of cocoa upward at this point. For wheat and corn, we are seeing the price of wheat and corn down, but we are seeing them trend higher, I beg your pardon. But what is happening is we are seeing more exports come, for wheat at least, we are seeing more exports come from Ukraine to other parts of the world. And because Ukraine is also a large producer of wheat, that is kind of easing the supply concerns. But the US also, we are seeing good weather conditions and easing supply issues coming from the Black Sea, also boosting supply for wheat. So those factors, I think, would temper down the price of corn and wheat in the coming days.
Yeah, and I think even in Argentina, we did read this morning, they are also boosting their corn production, so that would also lead to taper. Thank you so much, Adesola Somoni, analyst of financial derivatives, for your thought this morning, and enjoy the rest of your day.
Thank you.
All right, now, so after that conversation, we'll head to the market, but that'll be after the break. This is Business Morning on Channels Television. Now, time to head to the markets. Now, we'll start with the fixed income markets. We see that overnight lending rate was flat at 15% as system liquidity settled at a net short position of 150.49 billion naira. Yesterday, Nigerian Treasury Bill secondary market is still quiet. The market is still quiet. But let's look at the market numbers now and see how the market really fared yesterday in details. There you go. For the federal government bonds, we see that there were just 18 deals yesterday, valued at 7.64 billion naira. We've said it that this market has been, not just this market, I mean, equities is just kind of very fluid. That's why we see it move. But it's been really market. Now let's look at these central bank bills and see how that also did. Only 7 deals yesterday, was 4.17 billion naira. Really quiet in this market. It's been for a while now. So now let's see the equities market and see how that did. There you go. We've had one day for 2 weeks now. We have 1 day positive trade, and then every other thing is in the red. So after one positive trade, we're back there to 0.04% down in the equities market, and market cap is not yet back on that 27 trillion naira. And let's see the activity. Activity yesterday was a whole lot of red, except for value, which was up, went from 1 billion to 4 billion. But we have Rotimi Fakayejo now joining us to tell us some of the backstory to all of this. Good morning, Mr. Fakayejo. Thanks so much for joining us.
Good morning.
So, I mean, 2 weeks ago, we did see one positive trade in the week. Last week, we did that. Now, this week, we've seen one positive trade, and then we're back to the red. Should we take this as a trend now?
Well, it can be taken so because there's really nothing to excite the market at this time. We are not expecting results until later in October, and whatever other thing, except for the few banks that are yet to bring in their audited half-year report. But be that as it may, whatever is the situation now, there is really nothing to excite the market to make it continuously be on in positive territory. So we may just have 1 day up, 1 day down. But what is good in the market right now is that the extent to which the market drops or goes up, which the extent of the volatility still remains very, very marginal and affordable. So what that implies is that the market is fairly stable, and that is good for the market at this time. So if we look, as the trend continues, if we look forward to a better market, a better position for the market, then definitely that may come when we begin to see the results of the audited reports of the 5 banks that have been doing interim dividend by later this month or early September.
Yeah, but you know, it's like the earnings season came and went, and we didn't really see the impact on the market or investor sentiments, or did I miss it?
Well, you didn't miss it. It's all because it has been priced in before the results actually came. Well before the results came. And we should know also that most of the results came in very, very late. Most of them came in at the last 2-3 days of the expiration for them to submit their half-year report. So you didn't really miss anything. We didn't see those changes really come as it were, as will have naturally followed the release of those results. But I don't really think there is much expectation vis-a-vis the macroeconomic factors that are not really favorable for the market at this time. So we expect things to we expect a lull in the market for now, and we hope things will get better much later on.
So we've had a lot of conversations as to the uncertainty that is driving investor sentiment, and perhaps that's why we see this trend in the market, not just in the equities. Would you say this is connected to the political uncertainty or the stage at which Nigeria is at this time?
Yes, it's very much connected to the political uncertainty, and more so for the reality we are seeing concerning the economy. If you look at all space now, virtually all foreign investors have been shut out because of the uncertainty regarding the foreign exchange rate. And that also is implying so much. We've heard in the news that Emirates is canceling flights to Nigeria because they cannot remit the funds that are really outstanding, which they can't repatriate the proceeds of the flight tickets. And so definitely this happens in every facet. And this has really actually take out the foreign portfolio investors, and we are where we are today. So what is really happening now is a combination of the economic situation and also the political uncertainty.
All right, Mr. Rotebifakajo, stockbroker with NGX, thank you so much. We'll certainly look forward to the brighter days in the markets. All right. Okay, so just before Ladi takes over, there you see deals yesterday was 3,400. Let's look at the sectors for yesterday. Industrial goods, which was very, very vibrant the day before, was unchanged yesterday. And then we see a lot of negatives, except for insurance. Unfortunately, insurance does not really have that way to move the market. And so that's why the market cannot move. Let's say the unlisted market, the NSD, that is in the positive, and it has lost that 1 trillion naira, which it jealously guards. Unfortunately, we have lost that for a couple of days now. Let's see if that will be back before the weekend. And then the deals for yesterday were 7. The stocks traded were just 5, valued at 5.98 million. So there you go. Not very green in the markets, but let's see what Ladi has to offer. Maybe the crypto will look any better. Ladi, hi.
Sorry to disappoint you.
Oh no! Oh no! Don't say that.
Doesn't look any better.
I guess it's a global village. The world is a global village. Everything is connected, so you can't have it here and run away to this place. You just have to face.
Like, no market is safe at this point. We saw the U.S. markets actually tank yesterday, and that, trickled into the crypto
the U.S. market has so strong hold on the crypto.
That correlation is so strong. They see, both Bitcoin and NASDAQ almost as the same thing. So once you see that going down,
in spite of this, Russia's earnings on energy imports is increasing.
It's still increasing.
I don't think that's fair.
Yeah, if you're in that market,
paying for it.
If you're in that market, you'll be smiling to the bank at this point.
All right.
So it all depends on where you are in the market.
I'll relocate.
Right. Maybe we could go into some oil business. All right. Let's see. Yeah. So we see the fear level this morning. It's more now, 30 points. We're celebrating the 40s yesterday, but now we're seeing it there, 30 points, still fear in the market. Let's flip over to the market cap. There we see $1.12 billion. That's down 4.18%. Volume traded in the total crypto space, that's Bitcoin plus the altcoins, there's $68.67 billion. And we see Bitcoin dominance there at 40%. It got to about 39 yesterday. Let's see what's happening with Bitcoin at 8 a.m. this morning, $23,376. Very far away from that 25K level we saw the last time, down 0.22%. Volume traded for Bitcoin, $28.77 billion. And we see the next slide there, talking about Ethereum. That's the hype of the moment, talking about that merge coming up. It's at $1,800. It did cross 2K, but now we're way below 2K at this point, down 0.22%. Volume traded in Ethereum, $28.77 billion. So we see merge is not pushing Ethereum at this point, with the whole market going down. Let's bring in Olumide Adesina now, financial market analyst. Hello, Olumide.
Hello, Ladi. Thursday morning.
Yeah, great Thursday morning. Like, I'm used to Thursdays always having some kind of sell-off, from the U.S. equities market down into the crypto market, and we're seeing that happen right now. How are you seeing the market?
Yeah, Ladi, just like you rightly said, you look at the fundamentals, recession fears in China, GDP growing by 3.8% in 2022 doesn't sound so good. And housing report shows that Americans are building less houses, also showed recession fears paramount. And that's where we saw risk of mood coming to play. And pretty much, despite the fact that you were seeing the merge coming in a few weeks' time, we saw investors taking profits off. And that's why we saw Bitcoin breaking from the support of $25,000 to now trading at around 23,400, showing a moderation of about 3% for the day. But saying all these things, one should understand that the dynamics of the market is looking much more mature. We're seeing that the volatility in the crypto market is not like what we saw in 2021. and that's pretty much because we're seeing much more institutional investors swapping with retail investors, and the fact that also a growing amount of people are trying to stay on the sideline on the fact that inflation is still off the roof. So they're focusing on core services. So pretty much largely, it's still not so much exciting news in the crypto market this week, and we expect it to range at those points.
Right, and looking at the U.S. markets, we saw sell-offs in that market, and that also, trickled into the crypto market. So I'm wondering, Olumide, do the sell-offs happen at the same time, or can we use one as a pointer to the other? Maybe the U.S. markets go down first, then you now see the crypto market actually follow.
So actually, the crypto market being a 24 hours market, usually it shows some form of correlation between the Asian, European, and the American market. So when we see risk-off sentiment across equity and other markets, it really trickles to the crypto space. But one of the things you rightly said is that if you look at yesterday's news and the fact that the US dollar is becoming more strong, on the fact that US Fed has shown aggressive approach to inflation, you could see that this really showed moderation in all assets. So yeah, there are some positive correlation, but at times it couples based on market sentiment. But right now, I think investors are looking at the US dollar and focusing more on core, keeping their money in core assets.
Right, and what are you seeing, going into the weekend? I know most of these sell-offs actually, going to the weekend with the crypto market being a 24-hour market.
Yeah, I still not want to bet against Bitcoin bulls. They've been able to at least reduce the losses year to date by half, and that tells you that the market dynamics is changing and evolving. But still, you can't write off the US dollar, the fact that the US Fed that controls many denominated US dollar assets has a pull to play. So it's really going to be between the $20,000 and $25,000 support. Any break above or below that will really lead to panic sellers, or panic buying.
Right. Olumide, thank you so much. Financial market analyst. Always great having you.
Thank you.
All right, now, see the top odds by market cap is all red on that counter. We're seeing BNB there looking like it's going to lose that $300 mark. It's down 0.16%. We see all red. Let's flip over to the top gainers. Yeah, when you see stable coins there on the top gainers list, it's getting real in the market there. We see BUSD, TUSD all in the market. So, Ini, as I always say, yeah, it's a rough market right
it's
now.
It's a rough world right now, Ladi.
Yeah,
it's not just about the market. No market is safe, no economy is safe.
Yeah.
I mean, UK is recording double digits inflation.
Right.
If Nigeria does it, we say, oh, it's because it's an emerging economy. But, I mean, the UK is there. The US is heading there. Germany is in trouble. Energy prices. So it's a rough world at this time.
But we're going to stay invested anyway.
We'll stay invested. We'll come through. Thank you, Ladi. See you at 1:30. Right. So that's it on the program. Thank you so much for being a part of it. We'll have a final one tomorrow. We do hope you will join us for that. I'm John McQuaid. Enjoy the rest of your day.